CEO confidence has remained very, very high, supposedly all waiting for clarity on tax reform, and that would spur lots of M&A activity. Well, joining us now, Jim Forbes of UBS Investment Bank. Does it?
Absolutely. Let's think about lowering tax rates from 35% to 20%, what that does to corporate profits and cash flow, obviously. But also don't forget the repatriation of it's over $2 trillion of profits trapped overseas by U.S. companies at the end of the day. Even at a 14 or 14.5% tax rate, which is what the House and Senate bills are talking about, it's not all going to be repatriated at once, but we're going to have a huge influx of cash back in to the United States. Some of it obviously will be used for share buybacks, some for new capital equipment, et cetera, but some of it will be used for M&A. So I think it's another spur for M&A.
But how? Because if they go to cash, it's going to be dilutive. If you go with shares, it'll be dilutive. If you go with debt, the era of like the big LBOs has to be done when you have interest deductibility and a question mark.
I don't think the big LBO is over. I mean, I think if you talk to private equity professionals, and I do a lot of work with private equity firms, I think what you're saying is, okay, if you cap the deductibility at 30% of ATI or adjusted taxable income, it's almost like EBITDA at the end of the day. It's not that significant impact. What they will do in terms of capital structure is have perhaps more preferred equity versus debt. So the days of seeing deals leveraged 7x may not happen anymore, but will it be 6.5 with some preferred equity or 6 with preferred equity at the end of the day? You know, if you think about it, reducing that corporate tax rate, whether it's a company owned by private equity or a public company, is dramatic at the end of the day in terms of the cash flow of the company.
So, Jim, take us into the psychology of the C-suite, because skeptics of the tax overhaul bill would say, wait a second, corporations have record amounts of cash on their balance sheet already. They have the ability to access money through loans at record low levels. So if there was a good deal out there to be done, they do it. They don't need the tax bill to persuade them to do a good deal.
I think it's, David, I think it's the last piece of the puzzle. We've had some regulatory reform, which is positive out of Washington. But I think CEOs and boards, this was sort of the last piece they wanted to see to really push forward. I mean, I've talked about the recipe that, CEO confidence, activism, divestitures, carve-outs, and private equity really being the formula for increased M&A activity. This is why we're forecasting, substantial activity next year, increase in activity, as well as more elephant deals, which are the $10 billion, $20 billion plus deals.